Most people lose money in the stock market because they confuse trading with investing, and it costs them big time. Now, I should know, I've been investing in the stock market for more than 20 years, but for the first few years, I failed to build wealth because I didn't understand the difference. Today, I'll break down the simple mindset shift that helped me stop chasing short-term trades and start building real wealth in the stock market. By the end of this video, you'll understand this critical difference that could be the most important lesson you ever learn about the stock market. Hi, my name is Brian Feraldi. I'm a financial educator with 20 years of investing experience. Now, at first glance, trading and investing look very similar. Both involve spending money today to buy an asset like a publicly traded stock. Now, both are hoping to profit from owning that stock, and both will sell that stock at some point in the future. Now, these similarities are why so many people, myself included, used to think that trading and investing meant the same thing. But in reality, traders and investors have completely different goals, time horizons, tools, and mindsets that make their activities completely different. Now, to understand why, you must understand how a stock price works. A stock price is driven by two components. First is the company's profits. The second is how investors value those profits. Now, a company's profits tend to change slowly as it requires the company to acquire new customers or enter new markets. But a company's valuation, or how investors feel about those profits, changes very rapidly. Now, which of those two factors that go into a stock price you are primarily focused on trying to make money from is a major indicator of whether you're a trader or you're an investor. Let's start with trading. So trading is kind of like trying to win a sprint. Traders are looking to make quick gains in the stock market. They buy stocks hoping that their price will rise soon, sometime within hours, minutes, or days. Now, when I first started investing, this is what I was doing. In fact, this is what I thought investing was. I thought that making money in the market was buying a stock for $1 and then flipping it to somebody else for $1.10 at some point in the future. Now, a trader's mindset is, I'm just renting these stocks. They don't get attached to the business behind the stock at all. They're looking for volatility, because bigger swings in stock prices means more opportunities to make short-term profits. Traders spend all of their effort focused on the valuation side of the stock price equation. Traders actively seek out stocks that are very volatile and have rapidly changing valuations. And they use tools like technical analysis, which analyzes charts and price patterns, to make buy or sell decisions. Now, most traders have to remain glued to their screens during market hours because they can't afford to miss out on a big change in stock prices. Otherwise, they risk losing serious money. To show you this in action, let's take a look at Microsoft's chart over the last 5 years. In an absolute ideal world, a trader would be trying to buy here and then sell here, buy again here and sell again here, and repeat this process again and again, trying to take advantage of short-term changes in price of Microsoft stock in order to profit. Now, stock trading has existed for centuries, but one of the most famous traders of all time was Jesse Livermore. Jesse Livermore made and lost a fortune many times, including making an estimated $100 million in the Great Crash of 1929. That allowed him and his family to live a very luxurious lifestyle with the profits he earned from trading. Now, that sounds great until you realize that Livermore's life and fortunes were also extremely volatile. Livermore declared bankruptcy multiple times, endured multiple divorces, and ended up committing suicide in 1940. Now, Livermore had mastered the trading game like no one else, but his life should serve as more of a cautionary tale of how even extremely successful trading can take its toll. Now, if trading sounds easy, you should know that it's not. In fact, day trading is really hard. Multiple studies have been produced over the years showing that for the vast majority of people, day trading is a losing game. In fact, one study concluded that over 97% of day traders lose money, especially after fees and taxes. And another study from Taiwan showed that less than 1% of day traders consistently earn profits. And those were likely professionals with elite tools and information. So if you think day trading is your path to wealth, just know that the odds are worse than Vegas. As a side note, if you're enjoying this video, you're going to love a free ebook that I have about investing. It contains 10 of the best visuals I've ever made. If you want a free copy, just visit longtermmindset.co/investing or click the link in the video description. Now let's talk about investing. Investing is like trying to win a marathon. Investing is all about the long term, where the results are measured over years, decades, or perhaps even a lifetime. An investor's mindset is, I'm an owner. Investors think that they're buying pieces of real live businesses, and they're hoping to benefit from those businesses' growth over long periods of time. So instead of looking at charts and using technical analysis, investors study business fundamentals. They focus on things like profits, customers, growth potential, and cash flow. Investors buy and then they hold those businesses for a long period of time, and they build wealth by holding a company whose intrinsic value is increasing as the company grows its revenue and its earnings. So investors focus all of their attention on the profit side of the stock price equation. They're looking to make money by holding companies that steadily grow their profits over time, increasing their market value, and they often collect dividends just for holding those companies. Now, one of the most successful investors of all time is, of course, Warren Buffett. He turned a struggling textile company into a trillion-dollar empire and became one of the richest people in the world by buying great businesses like Coca-Cola and American Express and holding them for decades. Now, in contrast to Jesse Livermore, Buffett's life and results have been remarkably stable. He avoided the chaos of trading, choosing to live a quiet life in Omaha, Nebraska, and he stuck to his principles and let compounding and the businesses do the heavy lifting. Buffett's success is a powerful reminder that long-term investing is how real wealth is built. To get back to that same 5-year chart of Microsoft that we saw before, an investor would simply buy the stock and then hold it for a period of years, banking a solid 22% annualized gain along the way. Now, famed investor Howard Marks has a wonderful quote about this process that I just love. He said, "Day traders consider themselves successful if they bought a stock at 10 and sell it at 11, bought it back the next week at 24 and sold it at 25, and then bought it a week later at 39 and sold it at 40. If you can't see the flaw in this, that the day trader made $3 in a stock that appreciated by $30, then you probably shouldn't read the rest of this book." So to summarize, the difference between trading and investing: first, it's the mindset. Traders think I'm a renter, while investors think that they're owners. Traders have a short-term time horizon where investors have a long-term time horizon. Traders use research like technical analysis and charts, while investors use research that's focused on fundamental analysis. And traders check stock prices frequently, often multiple times each day, whereas investors check stock prices occasionally, often just a few times each year. If visual summaries like this are helpful, you can grab a free copy of my investing ebook at longtermmindset.co/investing, or check the link in the video description. Well, I hope you enjoyed this video. If it was helpful, give it the thumbs up. It really helps us out on YouTube. And if you want to keep learning from here, I highly recommend you watch this video next.